Alibaba's cloud business was once a thriving and promising division that outstripped its rivals and spearheaded important initiatives, but faced increasing government scrutiny and regulatory challenges in recent years. Alibaba Cloud, also known as AliCloud, was launched in 2009 as a platform to provide cloud computing services to businesses and organizations. Alibaba invested tens of billions of dollars over more than a decade to build up its cloud infrastructure and capabilities, expanding its global presence and developing cutting-edge technologies such as artificial intelligence and big data analytics. By 2020, Alibaba Cloud was the largest cloud service provider in China, with a market share of over 40% and the fourth largest in the world, behind Amazon Web Services, Microsoft Azure, and Google Cloud Platform. Alibaba Cloud boasted a diverse portfolio of customers across various industries, such as e-commerce, finance, gaming, education, healthcare, and media. Alibaba Cloud also supported some of the company's own initiatives, such as ChatGPT, a large language model that rivaled GPT-3. However, Alibaba Cloud also encountered several challenges that hampered its growth and profitability. One of the major challenges was the increasing regulatory pressure from the Chinese government on the internet sector. The government tightened its control over data security and privacy, imposing stricter rules and standards on cloud service providers. Alibaba Cloud faced regulatory scrutiny for several incidents, such as discovering and sharing a software vulnerability before informing authorities in 2021, and being involved in a massive data breach that exposed personal information of over 1 billion users in 2022. Another challenge was the intensifying competition from other cloud service providers, both domestic and foreign. Alibaba Cloud faced fierce rivalry from Tencent Cloud and Baidu Cloud, which offered similar or lower prices and comparable or better services. Alibaba Cloud also faced competition from Huawei Cloud and state-owned China Mobile Cloud, which had the advantage of strong government support and access to resources. Moreover, Alibaba Cloud had to compete with global players such as Amazon Web Services and Google Cloud Platform, which had more established brands and larger customer bases. As a result of these challenges, Alibaba Cloud's revenue growth slowed down significantly in recent quarters, falling short of analysts' expectations. Alibaba Cloud's revenue increased by only 2% year-on-year in the first quarter of 2023, compared to 37% in the same period of 2022. Alibaba Cloud's operating margin also turned negative in the first quarter of 2023, indicating that it was losing money on its cloud business. In May 2023, Alibaba announced a surprising decision to spin off its cloud business and list it separately on the stock market. The move was part of a broader restructuring plan that involved splitting the company into 6 divisions and listing or financing each of them independently. Alibaba said that the spin-off would allow its cloud business to have more autonomy and flexibility to pursue its own strategy and goals. Some analysts speculated that the spin-off was also motivated by the government's desire to break up Alibaba's dominance and influence in the internet sector. The spin-off of Alibaba Cloud marked a dramatic shift in Alibaba's vision and ambition for its cloud business. Once seen as a core pillar of Alibaba's future growth and innovation, Alibaba Cloud became an independent entity that had to fend for itself in a challenging market environment. Whether Alibaba Cloud could regain its momentum and profitability after the spin-off remained to be seen. One of the most surprising moves that Alibaba announced recently was its plan to fully spin off its cloud business. Alibaba Cloud is the largest cloud computing provider in China and the 4th largest in the world. It has been growing rapidly and generating billions of dollars in revenue for Alibaba. So why would Alibaba want to give up on such a lucrative and strategic business? The answer lies in the complex and ambitious restructuring that Alibaba is undertaking to cope with the changing market conditions and regulatory pressures. Alibaba is not only spinning off its cloud business, but also its logistics arm Cainiao, its grocery unit for Shippo, its international commerce division AliExpress, and its local consumer services platform Yili. All these businesses will be distributed to Alibaba's shareholders as separate stocks, giving them more autonomy and flexibility to pursue their own growth strategies. By doing this, Alibaba hopes to achieve several goals. First, it wants to reduce its debt and improve its cash flow. Alibaba has been investing heavily in these businesses, but they have not been profitable yet. By spinning them off, Alibaba can free up some capital and focus on its core e-commerce and digital media segments. Second, it wants to diversify its revenue streams and reduce its reliance on China. Alibaba's cloud and international commerce businesses have been expanding globally and have huge potential in emerging markets. By giving them more independence, Alibaba can tap into these opportunities and hedge against the slowdown of the Chinese economy. Third, it wants to appease the regulators and avoid antitrust scrutiny. Alibaba has been facing increasing pressure from the Chinese government over its dominant position in e-commerce and fintech. By splitting up its businesses, Alibaba can show that it is not a monopoly and that it is willing to cooperate with the authorities. Alibaba's plan to spin off its cloud business is a bold and risky move that will have significant implications for its future. It will also create new challenges and opportunities for its competitors and partners in the cloud computing industry. Will Alibaba succeed in this historic six-way shakeup? Or will it regret giving up on its cloud computing crown jewel? Stay tuned for more analysis in this video.